What's going on, guys? It's Will. I hope you're having a great day today. In this video, I'm going to share with you how you can become a successful Robinhood investor. Now, by the way, if you're serious about investing on Robinhood, I encourage you to check out that first link in the description where you can see Stockmate, and that's where we invest on Robinhood every single day, and you can surround yourself with other Robinhood investors. Now, guys, the topic of today's video is, can you retire investing only on Robinhood? And you can't unless you got the good technical analysis and fundamental analysis skills that you need. So we're going to go over exactly how you can develop those to become a better Robinhood investor and ultimately be able to grow your account in the long term. Personally, I like to invest in companies. So I could invest in the S&P 500, and I actually do have some investment in it, but when it comes to my investment strategy and personally how I like to invest, I choose companies I see value in, and it's been a lot better. I've been beating the market by a significant margin as opposed to investing in the S&P 500. So yeah, that's really just it, guys. There's two very clear categories of how you break down a stock. There is technical analysis, and then there is fundamental analysis. So fundamental analysis is going to be doing all the news, okay? And technical analysis is going to be looking at all the charts and some of the technical indicators like the RSI and the MACD and the EMA and the SMA and all those indicators that you get on Robinhood, which are on the Robinhood web. When it comes to fundamental analysis, some of the things that we look at are going to be the earnings reports, right? Seeing some of the earnings of the company, and then also seeing let's say analyst ratings. What are other people saying about this company? The news articles, of course, right? Is there any positive news that may act as a catalyst for this company, or is there any negative news that maybe would be a good indication to stay away or to sell? If you have Robinhood Gold, then you get the opportunity to get the research report. In the research report by Morningstar, you get access to an equity analyst report, which is a bunch of numbers that are all the profits, their earnings ratios, their cash flow and stuff like that, which are great to look at. They're more advanced for fundamentals. But the main things that we look at for the research report that you get when you have Robinhood Gold is going to be the economic moat, right? Does this company have a moat against competitors? Are they at risk to competitors? If they have a wide economic moat, like say Amazon, they're not so much at risk to other competitors. If they have a very small economic moat like Tesla, because any electric car company could come along, then they might be at risk to competitors. So those are just some examples, but they give you economic moat, the fair value. So if a company is worth, let's say Apple's worth $200 per share, and $200 per share is what you would pay if you bought it right now. Okay, so if you were to buy it at $200 a share, but the fair value is at $210, then maybe that means you're getting a good deal, right? Because the intrinsic value, the actual value of what's estimated is going to be $210, and you bought it for $200. So that's something you look at. And then the other thing that I love to look at, and we'll get into these tools, how to use them effectively in just a second, but the other thing I like to look at is the stewardship. Okay, so the stewardship is the people within the company, the CEOs, the people that are high up. Are they acting and making sure the decisions they're making are in the best interest of the shareholders and people investing in the company? Or are they more doing it for themselves or whatever it may be, and not actually making best decisions that they can make for the shareholders? I'm going to go ahead and hop on a stock, share with you guys what it is that I look at, and you can get a good understanding for what we look at for the analysis tools. There's going to be quite a few tools that we go over very quickly, but I just want to make sure you guys know, if you really are serious and you want to get these skills down in depth, I can only keep this video so long to really explain each one effectively. But there's that first link in the description. We go over all these tools in depth, and I answer questions every single day. You can get in early right now, and all you have to do is early bird for the coupon code, and you get $5 off. Hopefully you guys enjoy this one, and I'll see you guys on my phone.
So first things first, you can see that on the 5-year, it's a very consistent uptrend before aggressively selling off on June 20th until December 28th. All right, and we saw it recover. It's been recovering very nicely, and then got rejected here at around 191, which is a previous resistance. Okay, so this previous resistance around 190 got rejected, sold off, found support right here. Okay, and then now we saw it push up, and you can see now it's kind of continuing that upward direction. As of right now, before investing, one thing I would look at is that we want to invest in uptrending patterns. It is an uptrend, but that being said, it is pretty close to this previous resistance. But is it? How close is it? Well, we can take a look. Usually when I'm investing, I look for about 10% margin for profit. All right. That being said, we can see right here, it's about just about 10% margin for profit, which is something that I find attractive. Okay, so Facebook's a pretty good company. You guys know that. If I'm going to be doing a 10% margin for profit, then I'd want to cut losses, right? If it doesn't go well, around 2.5%, right? So if I cut losses, then that's good. I lost 2.5%. It may seem like the end of the world, but then, I can get 10% on the next trade, and that's, really good for, long-term investing when it comes to that. Okay. So, I'm going over stocks. If you don't want to trade, then, I recommend just investing all your money in, an S&P 500. You can go here, search, just search S&P, and then you'll see that there's going to be quite a few, if my internet would load. And I would probably just shoot for the Vanguard one, simply because Vanguard is they have a very high performing S&P. They've averaged about 10% over the past 100 years. Okay, or this fund, in general, the index fund has averaged over 10%. Okay, in the past 100 years. So that being said, 8 to 10% per year is not crazy, and not something that I personally work with, because I make more than that on my account using stocks. Investing in the individual stocks. But if you're not going to be watching this every single day or every week, then I recommend just investing in the index fund. Okay. So anyway, guys, when it comes to Facebook, we can see that overall uptrend looks good. If you're going to look at the chart here with the candlesticks, and it can give you some of the volume there. See that volume below the chart, right above the increments of time. Right? See that volume? Well, when there's spikes in, say, like green, that may mean that it's going to, take a bull run, right? Continue up. And if there's spikes in red, that may mean that it's, selling off, right? Because that's the volume, the amount of exchanges that were in, selling, like people selling red, okay? The amount of people that were buying was green, right? So when there's an increase in the volume of the amount of people that are, that's going to, fluctuate the price, obviously, in that direction of the color that it is, right? So one more thing, when you're looking at the chart, obviously there's a lot more indicators to use on the computer, and if you want to learn those, I encourage you to click that first link in the description. But for doing it all from your phone, this is pretty much all the tools you need to profit, right? So best bid is the price at which people are looking to buy, right? People have limit buys set at these different prices, and you can see that there's the amount when you scroll down, or the size of the amount of bids. Okay, now the ask is the limit sells, the people that are looking to sell at that price, right? That specified price. So if the ask is at, let's say it's at 200. Okay. So 200, there's a lot of people looking to sell around 200, right? The size 10,578, right? So that gives you a good indication, right? That based on this market data of level 2, you can see when people are looking, to sell, and when people are looking to buy. And if there's a lot of high number of people that are looking to sell at a further out price point, then that may mean that it's a good indication to buy. If the people are looking to buy at a very high, or there's a large amount of people looking to buy at a lower price, then it may not be the best investment, right? So using this to get some information to make your decision is absolutely something I recommend. And Market 2 data can help you with that. It takes practice and seeing, but it's really simple, right? You look for if there's more people looking to sell at a higher price point, then that means that it has growth potential, right? Because people are in it. And yeah, this isn't the chart, right? This isn't the chart. This is just the potential amount of people, right? These are the people that have limit orders to sell. These are the people that have limit orders to buy, right? So they don't become effective on the chart until those orders are executed, right? So when it comes to Facebook, you can look at the stats as something I use as well. So the stats are going to tell you exactly, when the open and the high was, for today. So you can see open 19 or 194.30, or that was for today, right? And you can see, I think it was right here. Yeah, open 194. It's just about the same, right? Anyway, those matter, but what really matters, for the stats, I like to look at the 52-week high, because the 52-week high will tell you when, a good point to sell, right? People see that there's, a stock is at an all-time high. That may be a good indication that it's at a point where it may peak out or get rejected, because, previously, that was the high that it hit, the past year, okay? So people look to sell around the 52-week high, and then contrary to that, on the 52-week low, oftentimes people look to buy, right? Because there's a psychological floor, if you will, where, that stock is bounced at that price of $123, right? Okay, so volume, you're going to see volume. This is the total volume of today, right? The amount of exchanges, people buying and selling, over 10 million, right? And the average volume is 22.8. So that's something to pay attention to. Usually you don't want to invest in something that has a very low volume, right? Or a very, very high volume. If it's a very low volume, then that oftentimes means that, your kind of, identification of the stock and whether or not you think it's going to go up, it's not going to be very accurate, because someone putting in a large amount of money could, greatly influence the price, or someone selling money could greatly influence the price if there's hardly anyone investing it, But if there's a high volume, like a very, very high volume, then that means that there's a lot of people investing it that are driving the price up, exponentially, or not exponentially, but, artificially. And oftentimes those are called pump and dumps, and they're getting manipulated. And usually I like to stay away from stocks that have, extremely high volume, simply because that means there's a lot of people investing in it, and a lot of people buy with the thought that it could never stop going up, and they just buy with the euphoria that, oh, this is never going to stop going up, and then they see a significant decrease in their account. So make sure that you're staying away from very high volume stocks. All right, so that price to earnings ratio, it's good to keep around like 20. That's usually pretty good. And then the dividend yield, they're not paying out a dividend, but a dividend is something where, the company shares some of their profits of, a certain amount, each and every quarter, or sometimes even, in like closer increments of time. So, this company doesn't do that, but you can see that at Coca-Cola, you can see that at Apple. Sometimes, there's a lot of companies that do that. So just, look for that. And that's really good for long-term investing. There's a lot of, dividend yields that you can get from long-term investments that may pay off very well in the long term. Just if you're going for dividend yields, I also like to look for obviously the overall value of the company and not just the dividend. So anyway, let's look at the news real quick, and we're going to jump into the analyst ratings and this stuff super fast. Again, this is just kind of an overview of everything I look at when I'm identifying a great deal and making sure that it is something I potentially want to invest in. As of right now, seems like Facebook's a pretty good deal on the technicals. It's a little overextended. I want to wait for a pullback. About 10% margin for profit. It's something I find attractive. Okay, so UK regulator probes Facebook, Google dominance in advertising. Okay, after years of spending, tech's political machine turns to high gear. Okay, so they're spending more. Facebook is the latest tech company to come under EU's antitrust scrutiny. Okay, so there's always things that I see that are related to all their data collection, because they are a company. People use their service and they get to collect a lot of data in return. It's people submitting data. So obviously, they have a lot of data. So there's a lot of concerns, I guess. Absolutely, makes sense. Totally. Okay. And also they're working on doing Libra cryptocurrency. And that's going to be very interesting. It seems like it's going to definitely change some of the outlook for crypto. So overall, we can see that there's 48 analyst ratings. So that means that 48 analysts took a look at Facebook, and 83% of them say it's a buy, 15% hold, and 2% sell. Okay. So that being said, the 15% hold, that's usually based on if they don't quite know the direction too well. It does seem like it may be at a direction or sensitive price point because it's been previously rejected here, but it also has that potential, right? So that's why it's an 83% buy, 2% sell. Okay, so the buy rating and the sell rating is something I pay attention to. I wouldn't rely solely on this. Don't get all your information from one indicator. You want to use the news, use the ratings, the research report, and all these things we're going to go into, the earnings, as well as when you're doing, the market data. And if you're doing on Robinhood Web, using all the indicators like the RSI, the MACD, the EMA, and the SMA, great indicators to use for technical analysis. So when we're looking at the buy rating, you can see with more users and usage time than any other network, Facebook provides the largest audience and most valuable data for social network online advertising. Okay, so they are the number one advertising platform for businesses now, right? Even bigger than TV, okay? So sell rating. Facebook is currently a one-trick pony and will be affected severely if online advertising no longer grows or if more advertising dollars shift towards others like Google or Snapchat. As of right now, they are the number one, right? They are the main platform for those that advertise. But that being said, there are other, competition, right? And to look at competition is to look at the economic moat. So you can see here, you got the research report with Robinhood Gold. It's got Facebook's network effect moat source remains intact. Okay, so what that pretty much means is they have a good moat, right? They have a lot of kind of cushion for competing against others because they're so well established. All right, so looking at the economic moat, you can see it's wide. Okay, based on this economic moat, what is some of their strong points where they are, definitely monetizing and competing with other companies well to where they can't really, they've cornered the market, if you will. Okay, so that's something that you look for in an economic moat. And then also, what are some of the things that may, be a weak point, right? What are some things that would affect this economic moat where, another company could come along and possibly affect that, right? Because usually when I invest in something, it's, a swing trade. It could be a few weeks or even a month. So with that being said, you like to look at more of the, obviously short term, but, long term, competitors and their moat effectiveness. Okay, so, that's how I use the economic moat. The fair value is going to be $200 per share. The current price is $197. Okay, so that means that it's undervalued. The intrinsic value is about $2.82 higher, right? Yeah, I mean it looks really good as far as like long-term value, right? We know Facebook's very prevalent and a lot of people use it. For the risk, this is what you look at if you're trying to see exactly what would be the main risks associated with investing here, right? We do know that in order to grow our accounts, the number one thing we really have to be conscious of is that we manage risk and that we look for the margin for profit, but that we're also properly managing risk so that we can grow our account in the long term. So look at the risk. Definitely use that one. It's something that we go into in depth a lot of the time in most of these videos. But simply put, this is where you're going to see some of the estimations for some of the things that might negatively impact the company if they continue doing something or if a competitor comes along, right? The stewardship. So we went over it, but the stewardship is going to be the the company's kind of CEO, right? That's Mark Zuckerberg, and it's going to be based on some of the think of it as like the stewardship is like the rating, like the police of, hey, like, are these people actually making decisions that are in my best interest when I invest? That's kind of something you want to ask yourself. And based on Facebook, you can see like they are doing things that are going to help them in the long term. They're one of the number one advertising platforms, and aside from that, they partner with a lot of games, and you can sign in with Facebook on many websites. So their overall kind of market share is very big. And I think that for the most part, these companies or this company's kind of stewardship or people that are involved are for the most part working towards making sure that the growth of Facebook is continuing. Okay, and then also you can look at the analyst notes. That's great. I like to look at them. I'm not going to go too much into these. And one thing that I'm not going to fully go in depth in this video is just know, if you really want to grow your account in the long term, Know this right here. For the most part, it looks really complicated, but it's going to go over a lot of the same things like the fair value, the dividends, and also their market cap, their industry, but also, the economic moat, another explanation for the fair value and the profit drivers, the risk and uncertainty, right? The stewardship. You can read more about that. And then the analyst notes, like based on some of their recent news or moves that they're making, what does that mean for the company? They're going to go into that. And then also, year over year growth, what it means for this year, all their cash flow and what they're doing with the money that people are investing. Knowing all this stuff would be great. You can literally Google a lot of these things, knowing they have, free cash flow, and that, based on their, net income, what's the profit that they're making and stuff like that, which is pretty high with Facebook because, overall, as a company, they do a lot of their things online and a lot of their products are digital, right? So that being said, that's the research report. And last thing we're going to go over here is going to be the earnings. Okay, so the earnings report, that lighter green is the actual earnings per share. Okay, so that darker green is the expected. So here's something that I really love to do, and one of the things that I think has led to my success for when it comes to investing. If you see that a company beats earnings, okay, and then after beating earnings, maybe they have, I don't know how they did today. Oh, they did pretty good. But if they had a negative day today, right? Let's say like negative 2% or something, but they just beat earnings. They got a buy rating that looks good. Don't only pay attention to that, but overall the value and the fair value looks good. And then they beat earnings, but they didn't have a great day. It may be a good investment, right? It may mean that it's undervalued or oversold. Okay, especially if the actual EPS that exceeds the expected EPS in that quarter is of higher value than a previous quarter. In this case, in quarter one, it wasn't, right, compared to quarter four, but it did exceed the expected, which is good, showing signs of growth. So anyway, guys, that's really just it. We go into this in depth in the first link in the description. You can check out Stockmate. There's a full blueprint where you can learn these things, with me on a daily basis. You get, full lesson library. And then on top of that, when you subscribe, you get to surround yourself with other Robinhood investors, get weekly watch lists, ebooks, and a bunch of resources that can help you invest from your phone. So anyway, guys, let's continue to work hard and continue to grow. Thank you so much for watching. Hopefully you got some value from this. And if you did, comment down below. I'd really appreciate it. And also any suggestions that you have for future episodes. I'll see you guys in the next one. Thanks for watching.